Thanks for joining us for another edition of The Small Business Show with Jim Fitzpatrick, exclusively on ASBN.com.
Hey everyone, Jim Fitzpatrick. Thanks so much for watching another edition of The Small Business Show, exclusively right here at ASBN.com. Access to capital can make or break your plan for growth. We know that to be true. So what should you know if you're considering a loan, maybe an SBA loan? So joining us today to discuss SBA 7 loans is Brian Fernandez, who's SBA Commercial Loan Officer at Midwest Regional Bank. Brian, thank you so much for taking the time out of your schedule to join us here on the show.
Yeah, Jim, thank you so much for having me. I appreciate the opportunity to discuss my passion, which is small business lending.
That's great. That's great, because that's the audience we have. And I know that people right now are probably taking out their notepads or they're making some notes on their phone because, as you know, cash is the oxygen to any small businesses, and they are constantly looking for that, either that next round of funding or to secure the necessary loans that they need for growth. So talk to us a little bit about this. In 2024, you reached a high of, in 15 years, of 70,000 loans, which is just incredible. Talk to us about where that stands today. I mean, is this a good time for small business owners to be looking for funding? Is it out there and available?
It definitely is. And with the 7A product, it gives us an opportunity to kind of bridge the gap with what normal commercial banks want to, lend to, and then gives us a little bit more of that common sense approach to what helps your business succeed and the money that you need to help fund the future.
Right. I've spoken to so many small business owners, and they say that their local bank or the bank that they're doing business with, they go in for money, and they start from no. It's almost like the loan officer just goes, well, first of all, no, we're not going to loan you any money, but maybe you can sell us on the idea of us giving you some money. And more times than not, that doesn't work out. However, that's what the SBA is there for, right? Is to ensure that money, because SBA is not a lender themselves, but they guarantee, a good portion of that loan, I think up to 85%, to say, hey, Mr. Banker or Mrs. Banker, if you give this small business operator a loan, we'll insure it or guarantee the payback of it, which really gives the bank a huge advantage, right?
Yes, correct. I mean, the ultimate thing, right, from bankers' perspective, and the reason they start with no is they're taught from a very young age that we have to avoid risk. Right. And it's never 100% when you're dealing with risk, but you try to alleviate it the best you can. Right. The SBA 7A is great because, like you said, 75 to 85% is covered. Mm-hmm. They say, hey, we'll take some of that burden off you guys, and then allows you to use the capital as a bank to lend to those business clients that really need the money. That's right. And that's where, as lenders, we don't always get to say yes, but as a business development officer, that's what my job is, right? I want to say yes. I don't want to be the old style banker that's sitting behind the desk, going, oh yeah, tell me why I should give you the money.
Exactly.
We're more of a collaborative approach, right? Yes. Let's discuss how we're going to get you the money, and what we need to do to really get you what you need, and what's that total look like, right? So many times clients come in and they think they need a piece of equipment that's $200,000. Yeah. And if the banker's not, up on what's going on, they forget to add in that, someone's got to install that equipment. Yeah. And maybe you need bigger electrical capacity to run that equipment, right? Point. So now that 200,000 turns into a 400,000, and it's important to understand that, because the last thing you want to do is give that small business client 200,000 and then leave them leave he or she on the rope for another 200 that really they don't have. That's right. That's right. So, good point. It's key. That's where that collaboration comes in, and where we try to say yes because we understand the full picture of what's going on. That's right. And we have the ability to pull the strings in different ways to cater to your particular business. That's right. That's right. We had a couple of weeks ago, I don't know if you caught the show, but we had Kelly Loeffler, who is the administrator appointed by President Trump to oversee the SBA, and she talked about the SBA 7A loan, which covers so much. But if you would take just a second and talk about what falls under, what kind of loans are you giving under a SBA 7A loan? Yeah, great question, and it's one that gets asked all the time.
Sure.
The main one, of course, is owner occupied real estate. That business client that's tired of leasing or needs to buy a bigger facility.
Sure.
We do that. We can also add in, if you needed, some renovations done to the building to retrofit to what your business does. We can add that in as well, which gives us that flexibility. Of course, equipment purchases, just like I mentioned before, and then those other soft costs that come in, right? It could be, an equipment could be software for your compute, for your business, right?
Okay.
People forget that that's equipment, because ultimately you have to buy the software, and then you have to install it, and there is that ramp up period as well.
Sure.
So that's a big one these days as well, with especially sales and even some of the medical facilities needing those upgraded software systems as well.
Sure.
So we don't really dissuade any industry, which is great. But so those are the main two. We can also do startup business acquisition, business acquisition. So if you're a business and you want to buy another business, we do that as well.
What about this? Franchising is very, very popular, and there's a lot of people through COVID that maybe took an early retirement or took a package, and they said, all right, this is the opportunity to go out and open up a business, and they purchased a franchise. Would buying a franchise fall under a 7A loan?
It most certainly will. Sorry, that was on my list as well. The franchise, and the SBA's got a great list, even on their SBA.gov, that anybody can go on to see what franchises they've approved.
That's great.
So, if you're having questions on if this is a good franchise or not, if the SBA's got kind of kind of the okay to lend to,
right?
That's always a good indicator.
No
So
question.
I mean, we definitely do those as well. We want to make sure that we're there for those franchises, because when we're going back to risk, sometimes the franchises have a little bit less risk than just a startup, mom and pop.
Sure. Let's talk about some of the things that need to be included in the package, and some of the things that the business owners that are listening to us have this discussion should really focus on when they think about meeting with you, or maybe even prior to meeting with you. But what are some of the things that make up or to get you to an approval on a loan? What needs to be in the package and be addressed?
Great question, because so many times that's really, that gap is what leads us to, unfortunately, the no, right? But having it up front makes a world of difference, right? Having your 3 years business tax returns makes everything a lot easier. I can get a full picture of what your business is doing.
Sure.
A lot of times
on the tax returns, and maybe you were just going to say this, but on the tax returns, does the business need to be making money in order to get a loan? Because many small business owners, as you know, might expense a lot of things and not have a huge, profit shown on their tax returns. Is that essential that they have a big profit shown on tax returns?
It's not essential, but you want to be cognizant of those expenses that you're adding in. Of course, you want that bottom line to look as good as possible, right?
Yeah.
But also, the great thing about the SBA is, even if you're not making the profit that you want yet, right? Because there are those costs that come up, tariffs. I saw on another, one of your shows, one of the bankers was talking about the tariffs and how that affects, as those costs. And of course, after the last few years, we've had some higher inflation. So that has affected clients. We understand that. But having that business plan, and then having projections let's say, for example, if you're buying a piece of equipment, understanding that this piece of equipment is going to allow me to make XYZ amount of money, right? By having this piece of equipment. And that's where
you want to see that business owner knows that and can forecast for that.
Correct. So that's where, when you're not making the money you want, having those projections over the next 3 years and what that means to you as a business owner is going to be vital. Because we've got to see that, right? If there's just, I need the van, I want the van. Well, that's harder for me to say yes, right? We got to make sure that van's going to have another
van
employee.
for, and what's it going to mean to your bottom line in your business, right?
Correct. And that's ultimately, we want that accountability, and we want to know that your business,
right?
Because that's your baby, and I'm more comfortable. The bank's more comfortable. The SBA's more comfortable knowing that your business.
That's right. What about credit worthiness and credit scores? Can if somebody's got a a 620 credit score, and you hear so much about credit scores nowadays. Obviously, it's always a big factor when you're talking about loans, and certainly SBA loans is no different. But if somebody's credit isn't an 800 credit score, can they still get a loan through SBA?
Yes, yeah. So to give you an idea, they do kind of the ballpark that we like is that 680 number.
Okay.
But like so many things with SBA, the 7A product, it all depends, right? If we know that part of the reason your score is a little bit lower is because you used some revolving debt, right? Your credit cards to help pave the way to get your business where it is today.
Sure.
Well, we know that if you utilize credit cards and they're great, but once you go over that 35% threshold, your credit starts to take a hit.
That's right.
And so many of our business clients utilize that. So as long as we can make a case as to why, right, that's the big thing.
Okay. What about cash?
And really, again,
what about cash reserves? Do they have to have a whole bunch of money sitting in a bank account somewhere to prove to you that they can make payments on the loan, or is their daily operating expense account, or I should say their checking account, okay to show you, hey, here's what's come in, 100,000 came in last month, and it's been that for the last year, and is that good enough?
Yeah, so that we always like, and kind of the rule of thumb, whether it's regular commercial lending or even the SBA, we always like cash is always king, right? Yeah. It's always king. We like that 6 months to 12 months of knowing that, if something does happen, you can run your business effectively for that period of time. And that's really what we look at. Can you run your business the way with the expenses it has now for 6 to 12 months? If something, we're all kind of familiar with COVID, right? Could you still do that if that happened, right?
Sure.
But to answer your question, no, we want to see that you have some cash, right? Mm-hmm. No one wants to lend to somebody when they don't have any money,
right?
Because that makes it harder, right? That risk goes up. But the quick answer is no. We can work around that as well. It just has to make sense. And with if it's, for example, to purchase a business, or if it's to purchase that equipment, those projections, what your business plan shows will make a big difference when we bring that to our, back office folks.
And in purchasing a business, you can use the profit statements and such from the business that you're buying, obviously, right? So if I'm going to buy a business for $300,000, and you're going to want to see those financials on that particular business and how it's been performing over the last 2 or 3 years, right?
Yeah, because ultimately that's what you're buying, and that's, in a strange way, that's who the borrower is, because we're going off of their financials for the last 3 years, right? And how that pertains to getting you the loan, right? You're going to have your money, but you want to make sure too that you're buying a business that's going to sustain you as well.
That's right.
That's key, is looking at those financials too. So that can hold up business sales too. So even if you're not getting a loan with me today, if you're currently a business owner, make sure that you are doing your accounting right, and make sure it's showing a profitability. Because if you even have to sell it in 3 years, you want to make sure there's a track record of profit and it's worth as much as you want to get out of it.
That's right. That's a very good point. You guys also have extended terms. I mean, some of the loans go up to 25 years and also require maybe only a 10% down payment on real estate or other assets, versus what most banks will require in the way of 20 or 25 or 30% equity into the deal, right?
Yeah. So it's, again, with the 7A, there's no real cookie cutter approach, which is great for us out of the box thinkers, right? Sure. But of course, those longer terms help a lot, right? That extra 5 years going from a commercial loan to an SBA on a owner occupied real estate makes a world of difference when you're talking, that monthly payment every month. And then of course, with some equipment, depending on the life of the equipment, how long that equipment will last, having that equipment over that longer term as well helps dramatically. And then of course, the injection, that cash injection is nice, having a lower 10%. And then there's, again, going back to that 7A, how we can get deals done. Sometimes the former business owner holding back a loan note, things of that nature, we can get real creative as well. So
so you're not just a loan officer in this case, or you're really an advisor to that small business owner that comes in and says, hey, I need some help, I need some money, we're growing, talk to me, how do we get there? It sounds like you're kind of a team member where you say, hey, let me look at the whole picture and I'll advise you in these different areas as to how to make this loan work out, right?
Exactly. And so much through my 25 years of being in banking, that's how I always view myself as I of course work for the bank, but I'm also your glue that's going to help get the deal done.
Right.
And I'm also your small business consultant, right? If I'm not able to do it for you today, I've been in this business for 25 years. I might not do it today, but if I can help you next year,
right,
I'm here for that too, right?
Right.
It's not just about the quick fix. It's also about that relationship. And I would rather you trust me. And that's why some of those questions that we ask as development officers, sometimes seem intrusive to some people. But for us, if the better we understand your business, because let's face it, I don't do all the different businesses. That's what they do.
Sure.
If I can understand that and then I could articulate that going forward, again, I get to say yes a lot more than I say no.
Yeah.
Which is key to me.
That's fantastic. That's great news for business owners watching this right now who might feel a little bit intimidated by the overall process. What's your advice to set themselves up for success before applying?
Yeah. Understand exactly why you need the money, right? I mean, that's the key. Understand how you're going to pay for it, what you think budget-wise you can afford, because you're the best gauge of that, right? If at the end of the month it gets pretty tight, it might be tight to do that loan too, right?
Sure.
Unless it makes sense, like a piece of equipment that adds more business to your current underlying sales.
Sure.
So getting ready for that, understanding, maybe having that talk with your accountant to get some of the financials ready. The quicker you get those are usually what holds us up the most. Are the waiting on this piece, that piece. Once I get the whole package together, I can put it together.
Right.
Understanding too. I'm working on a deal right now out of South Florida, where what the gentleman needs is a piece of equipment. The provider can't even start to produce it till January of 2026.
Wow.
So I'm getting the process started now.
Yeah.
So that come January 26, he's ready to get that thing bought and paid for, and then it takes 3 months for it to get produced.
Okay.
So giving yourself a little bit of time also helps in some cases, especially in a specialized version like this.
For those that are listening that have applied at maybe a couple of different banks and gotten turned down, maybe at their very own bank that they have their payroll through and their merchant account and everything else, and you're scratching your head going, why did I get turned down? I mean, I'm with this bank. But if you did, okay, that doesn't mean that you're going to be turned down on an SBA loan. So it's a very different situation, folks. I've spoken to so many small business owners that have succeeded because of the SBA. I've had them on the show. You've seen them here before. We have obviously the executives from the SBA on all the time, and they will tell you, get the package together and apply for the loan, because I think you're going to be surprised. The money's there. It's just a question, in many cases, of asking for it. So, Brian, before I let you go today, and I appreciate all the time, tell us a little bit about your role at the bank, and then tell us about the bank.
Yeah. So, as a small business or SBA business development officer specializing in the 7A product, my job is to, like we've talked about today, proactively reach out to some of the business clients that I know, be there as that small business consultant to help along the way, and then proactively help you get what you need as far as for your business. Sure. And being in the business for 25 years, it's one of those things that is definitely close to my heart, is helping the small business clients. It's always has been. That's why I chose this particular career field, because I really enjoy it. I enjoy learning about what other, businesses do. Yeah. I've always been inquisitive like that. The why, right? Why do you do that? What's that for? Sure. So aligning with Midwest Regional Bank, who's out of Festus, Missouri, is where our headquarters is. Our CEO, Mike Bender, they acquired the bank back in 2007. They've been doing great ever since. We've got over $450 million in assets. Wow. We're consistently a top 50 SBA lender in America. So that's one of the things that we take great pride in. We have 8 states that we do SBA loans in.
Okay.
And of course, I represent Florida, but of course we have 8 that we do business in, which allows us to really diversify and help clients in different areas of the country.
Sure. We're showing all the information on the screen here as to how to get a hold of Brian, as well as the bank and their web addresses and such. Folks, if this might be the wake-up call that you've been waiting for, if you've got a dream to open up a business, or you have the need to grow your business, either way, whether it be a new startup or to grow your existing, the SBA is there to help you. Brian is a great guy. He's helped so many other small business owners get their loan through the SBA, and he can help you too. So Brian, thank you so much. Brian Fernandez, SBA Commercial Loan Officer at Midwest Regional Bank. Thanks so much for joining us. Really appreciate it.
Yeah, thank you, Jim. I appreciate it as well.
Thanks.
Thanks for joining us for another edition of The Small Business Show with Jim Fitzpatrick, exclusively on ASBN.com.